So, real estate, is it a good investment? And are there other ways that we can invest in real estate, non-traditional ways?
Right. So what we should talk about first of all is your friend who invests in real estate.
Yeah, I have one of my best friends from back home will buy rental properties and rent them out through Airbnb. So that's one way of doing it. My realtor does the same thing. He has a whole portfolio of rental properties that he rents out to tenants. That's, I guess, the traditional, what I think of as the traditional real estate investment model.
And if you're able to spend a lot of time running this real estate, it can be quite lucrative and you can make a lot of money. But I think you really need to do it almost on a full-time basis, like your real estate agent
Right. If
friend.
you don't understand what all you're getting yourself into, there could be a lot of hidden costs and time.
Yeah, and the other thing is, for a lot of people, if they're very handy and they're able to fix the real estate, that keeps the cost down. If it's like me and I can't fix it at all, if that doesn't work, I'd have to hire someone out and I'd lose all my money on hiring the people out.
So what are our other options?
Well, there's the real estate investment trust. You want to talk about how that works?
Sure. So it's sort of like a mutual fund. It's a basket of investments in commercial real estate mostly. So it could be in apartment buildings, medical facilities, and the income from that passes through to the investors. So you still get the rental income, if you will, but without the hassle of fixing a leaky sink.
Plus, you can get the upside of the growth of the, if the property goes up in value. So you have the ability to do that. And REITs have done really well. They've actually historically have performed as well as the S&P 500. So, you get the income and you get the advantage of real estate. It's also not quite correlated to the stock market, so
Right.
It gives you a little more diversification. Now, there's another way we can go, and that's, of course, the real estate mutual fund. You want to talk about how they work, kind of?
Sure. So there are mutual funds out there that are real estate themed, if you will, but they might have stocks that are, instead of just having commercial real estate properties, they have stocks that are related to real estate. So they range from hardware companies to
It could be hotels, a hotel company, or say a casino would be another one. So yeah, that's another way to. And again, you have the advantage of any pass through of an income. You have the advantage of capital appreciation, and you have diversification,
Right.
which is all good advantages.
But what if I have a vacation home that I no longer want, but it's going to create a taxable event to get rid of it?
Well, that's another option that we can do. So there's something called a 1031. That's the IRS code that allows you to pass on or to move from one piece of real estate to another piece of real estate without paying. You basically defer your capital gains. You don't have to pay it at that time. And the way it basically works is you first of all, when you decide to sell it, you kind of let us know that you're going to do it. And then your money actually, when you close, doesn't come to you. It goes to an intermediary who's an attorney. And we know a couple good ones, or there's local ones that can do it also. And then you can either have it go into another real estate, like a house, or you can have it go into what we call a DST, which is kind of like a REIT, but it's a little different, and we don't really have the time to get involved in the details. But basically, a DST allows you to invest in real estate, like apartment complexes, for example, or some of the ones we've done, and you get the rental revenue, and they usually last 4 to 8 years, and then they're sold, and you can 1031 it again if you want, or take the money at that time. Here's one other option people need to be aware of. You can actually, let's say you're selling that vacation home again, but you can put part of that money into a new vacation home that's cheaper than your current one, downsize, and you can put the rest of the money in the DST and escape the 1031 total, or the tax total on that. So that's another
Interesting.
option that people don't realize that we have access to this kind of stuff. So that kind of explains our views on different ways of investing in real estate. If you have more questions, please give us a call, and we'd be glad to answer any of the questions you have. Thanks.